Now, what about gold divided by silver? Yeah, I didn't know I could do math. Math serving me very well in my lifetime. XAU, XAG, that's gold silver ratio. So we know gold's like really creeping on that breakout, that monthly candle breakout, 1350 level. Silver, as we saw in my last podcast, has also been showing embryonic turnaround, price action above the 12-month moving average, starting to turn up. So what is the next move? Which one is going to be the better one that's going to outperform the other one better, always expressed in the US dollars? And what is that? Could it give us signals to how the market it could behave? So let me just start by adding my super duper favorite US recession. So I know, this US recession tells me that in 2015 I had a recession here. I really have to look that up. I think it's a micro recession, but the person who created this U.S. recessions, his data set has included that 2015, 2016 as a recession right there. So let's still check out. The one that interests me is 2008. So look at that. Whoa. A huge breakout on the ratio right there. Let me overlay. Let's compare. Let's add something else. Let's add the SPX. Always comes. Oh, no. That's not what I wanted. Let's do it this way. Add symbol right there. SPX. Okay, there we go. Always compare. I want to always deep dive, understand the markets. And whenever you have an instrument that you think doesn't have any correlation or doesn't belong, check it out. Always overlay. Check if it creates bearish divergence, bullish divergence. If there's certain levels where the price action it's telling you that it's going to melt down. Always keep an eye for all that. Keep your sense of observation out there. It's very hard, but the more you look, the more eventually you observe what's always been in front of you. And I'm gonna add. Hold on. I'm gonna add a moving average. Long live trading view. I'm gonna put my super duper 12-month moving average, and there we go. So where's my breakdown in 2008? It was right here. Check it out right here. Zoom in. Close below monthly defined breakdown line, declining 12-month moving average. Went down, came to test it. No, still below, accelerating that decline, and then down we went. And I need a vertical line. So this is the candle where it broke down. And as we've noticed before in my other podcasts, we're playing with the item fighting anatomy of market tops. And I've noticed that often when there's a monthly candle breakdown below a declining 12-month moving average on the SPX or the Dow, I'm not sure which one I used, a recession we were already in a recession. It was like the market telling you. But remember this, we only know after the fact, after they revise numbers, after they backed. Finally, we were in a recession. So that's like the market telling you, hey, something's up when that's happening right there. Not always, sometimes a few months later, but when you had a close below 12-month moving average, a sign of something was askew. All right. So here's my breakdown. Nothing quite happening here. When I broke down, I actually pulled back. And after that, when it really started accelerating, We had the breakout right there. And then as the ratio went up, so as gold divided by silver, as gold was gaining steam on silver, that's when the refuge, the money, instead of going just in silver, it favored going into gold. Am I saying that correctly? As the fear, this is the fear prepping, something's amiss, tighter and tighter range. And after that, when we broke down, that was the final straw. So until you get that really breakdown after the initial one, that's when gold really skyrocketed even more than silver. And after that, started unwinding slowly as the fear started alleviating. Gold less and less, and then silver just exploded, creating ultra low ratio. So silver was very powerful on the way up out of the bottom phase, and gold lost some steam. So you could say gold is initial. At this moment, gold was initially the first refuge, and silver followed suit. After gold exploded, silver followed suit and reduced the ratio. So gold divided by silver, if silver is worth more and more, that ratio is going to go down. And I don't know what happened after this. Price action kept going up, all the way up, and gold started regaining steam versus silver. So silver had a brief moment out of the recession, on the way back up, of the golden moment, but gold had a better performing at the beginning of the downtrend right here, and after the uptrend on the SPX was really going back up. Gold lost less value than silver. So gold +1, gold +1. So that's two for gold, and silver +1. So right now gold seems to be a better positioning initially, and after that, once we start turning over, you could probably go for silver if it starts outperforming, and then after that, gold gain steam back versus the. So what is this telling us right now, guys? Should we be expecting a breakout? Did we have a breakout right here above this level right there? Pull back, hitting that 12-month moving average, and then the ratio is going to go back up. Tighter and tighter formation. We're above an inclining 12-month moving average. We did have a monthly close above that line. We had another breakout right here. Let me zoom. Oh, right there. We had another breakout, sideways consolidation breakout move above. Close above, up, tested it. Close above the other one. The higher, bigger patterns, resistance line, breakout line. And we're staying above the 12-month moving average all that time. The SPX, meanwhile, we know about that crazy rally. So it has broken down, but back into a stage 3 right now, unless February really closes negative and we have a huge wick here and we stay below a declining 12-month moving average. The SPX is back into stage 3, guys. So maybe this is why gold is not exploding the ratio versus the silver, not quite yet. You really want gold to start outperforming silver when the price action is going to start going back down, guys. So it's maybe a simultaneous breakout of breakdown of eventually of the SPX, and that will coincide with a breakout for the gold ratio. And then you keep an eye on it when we start bottoming out. Sorry about that. bottoming out. Then after that, you could probably check out silver stocks, see if xag, USD, see if that has a nice breakout. That's going to start a little later on, guys. So that's the type of information I fetch when I look at a new chart that I'm not used to, trying to see correlations, but definitely an uptrend. So unless gold divided by silver, xag, closes below that 12-month average and starts breaking down, we're still looking at a weakness in silver versus gold, and a breakout above could coincide with a break of the SPX going down, guys. All right. Okay, guys. That's it for me. I'll try to let that marinate in my brain, see what else I could come up with. But gold, silver, right now, gold's favored. Watch for those breakout levels. See if you close above that 86.25. You could have another move up. And just for the fun of it, my swing rule would be, drum roll, if this was a pullback, a continuation move right there, the ratio should go all the way up to 99, guys. That's it. Thanks for listening. Ciao, guys.